Welcome to the Balance Sheet, where you rise above the noise and learn about the most important business issues of our age. I'm your host and fellow student, Conrad Chua. Japan seems to have suffered from several lost decades, but things might be looking up. Investor interest is returning. Our guest today, Professor Jusuke Ikegami, Dean of Waseda Business School, has looked at how companies like Hitachi, Panasonic, and Lawson are rewriting the playbook. They're balancing traditional values with bold, strategic change. Together, we'll explore the evolving Japanese corporate landscape and the global lessons this corporate renaissance holds. So, welcome, Professor Ikegami.
Thank you, Conrad. And thank you for pronouncing my Japanese name properly. Yeah, actually, it's not easy for non-Japanese to pronounce my name, Jusuke Ikegami. So my friends, it started in Cambridge MBA days. And then my friend in JBS started calling me JJ. So,
okay.
Yeah. So during this session, you just can call me JJ, two J's.
All
that
right,
should be
JJ.
easier for you.
Yeah. And of course, as JJ, you mentioned you were also an MBA student at Cambridge years ago, and now you are the Dean of Waseda Business School.
Long time ago, I was at JBS 97. I was the first Japanese graduate of Judge Business School.
Yeah. Okay.
Yes, long time ago.
Yeah. And so, JJ, you've co-written a book called Resolute Japan. What is that about?
Thank you. So this is Resolute Japan, the leaders forging a corporate resilience. And this is a co-working book with Wharton professor Habibu Sin and Mike Sin and myself. So this started more than 5 years ago. So originally, the project was started not from Japan. So Habibu and Mike started the similar project with India. So they started the interviewing nearly 100 top leaders of India, and they made a book called India Way. After that, they studied the more than 70, 80 Chinese leaders, and they wrote something like China Way. The name is, I can remember the proper name, but they have a summary of the essence of Chinese leadership. And then Habibu and Mike and myself did some executive program to Japan, and then while toward Japanese companies. It was a global project. And then while Habibu and Mike and myself teaching to Japanese top companies, they found, all right, JJ, it is said that Japan has a lost decades, lost 2 decades, lost 3 decades, but probably there is something new is emerging. So why don't we do some research under the similar format of India Way, China Way, and then bring it to Japanese Way. That was the beginning of the Resolute Japan. And then, so could you move to the next page? And then we published this book in mid-September with those structure. And then we found that, okay, there is a new leadership of Japanese companies, which can be applied to non-Japanese companies. So we decided, okay, why don't we make it happen? So in order to do this book, could you move to the next page? Yeah, we have interviewed over 100 top companies, blue chip companies in Japan, and then asked them, top leaders of these companies, the chairman or the CEOs. So including Asahi Glass, Ajinomoto, ANAE, Asahi Group Holding, Asahi Kasei. Those are the roughly out of the top 100 or 200 companies in terms of sales or market cap. And then we had a one-on-one type of interviews, one after another. So this is the first half, and then could you move to the next page? This is later half. Yeah. So we include Sony or Sumitomo Life, and then the Teijin or Recruit, Renaissance, so on, so on. So this is a mainly large company, but in the middle we decided, okay, why don't we look for some new emerging company? And that's why we also included some new startup companies like Ugrena and then so on, so on. So that's basically the background of Resolute Japan.
JJ, there's been increased investor interest in Japan lately. So is this Japanese comeback that you cover in the book, is that due to new corporate business leadership models in Japan? Or is it a case that, well, Japan has been so ignored and undervalued for so long that people now think actually the stocks are very good value, and especially now that Japanese interest rates are going up, maybe it's time to reinvest. So which one is it?
Yeah, thank you. It's a very good question. Basically, as you may know, the higher interest rate leads to lower share price, isn't it? Yeah. So it may be true the Japanese share price has been neglected, but I think, yes, there's some point, yes. Because of the external investors, and many people realize, oh, Japanese companies are undervalued. But I think these days, the high share price market cap of Japanese company in past few years, it not mainly by the interest rate and so on, but maybe for the new management way of those companies. Of course, not all Japanese listed companies are Resolute leaders companies. Yeah. So, however, so I guess probably out of roughly we have 3 to 4 thousand listed companies in Japan, and then my guesstimation is maybe not more than 10%, probably 5 to 10% of those companies are Resolute companies. Yeah, companies led by Resolute leaders. However, this made a positive impact to the other companies. So that's one background. I can talk about some other background why the market cap and the share price are increasing in Japan. But I think this kind of a corporate reformation, maybe one core reason of the coming back of the Japanese market.
So, what is this resolute Japanese model that you and your co authors found?
Right. Good. So there are probably 4, 5 major essence of those Resolute Japan, the Resolute leadership. So first thing is a leadership, human-centric leadership, okay, and more approachable leadership. So that's A. B, it maybe lead with long-term views, the real sense long-term views, okay. And third is a multi-stakeholder, not only for the employees or suppliers or companies, but including shareholders. Traditionally, Japanese companies are multi-stakeholder orientation, but in the past, these are the multi-stakeholder but shareholders. So the Resolute Japan leaders, multi-stakeholders, including shareholders, and then this make more flywheel vicious, the happy cycle type of governance. I can explain it later more detail. One more thing is the kind of ambidexterity, exploration of their business management. And then the maybe fifth point is resilience. So the leaders have all these 5 characteristics, and then we emphasis on all these in our book.
So, you mentioned that maybe was it 5-10% of the companies in Japan are probably in this resolute model.
Listed companies are Resolute.
Ah,
Leaders.
okay. So in your book, you also talk about how in Japan, it's very this idea of rising through the ranks and understanding a company's culture is very important for leaders. So, how did you see new CEOs who want to bring in these resolute Japanese principles, but they've risen through the ranks, right? They've been imbibed in that old culture. So, how did they go about changing business practices? Or why did they even think they needed to change?
Yeah. That is also a very good question. So internally promoted leaders in Japan are sometimes it's not easy for them to I'll say change the things because there's some inertia, right? So first thing is they have to realize the needs of change. Okay, so that first thing is how they realize is sometimes there is some tendency these readers has some experience outside Japan. So yeah, so even though they are internally promoted leaders, they have some experience outside Japan. Sometimes maybe studied abroad, like studying in Cambridge, or work abroad, the US as expats for a long period of time. And then when they come back to Japan, and they have some, of course, two eyes. One is, I'll say, insider eye, and the other is outside eyes. So with using both two point of view, they realize, oh, it's a time to change. That's a very important part, even for internally promoted leaders. And then how they move people is the communication, to be approachable. So in reality, traditional Japanese top leaders are in reality not so approachable, making them a bit charismatic. Yeah. So even though they go down to the factory or so on, it's a kind of red carpet type of some observation. So in order to make the change in the reality, they emphasis on the communication a lot. Basically, go down to the what we call gemba. Gemba is a real place where they generate the value. So like a sales site or factory site and so on, quite frequently, so that they can gather the information, real information, and also get some kind of more closer relationship with those people who make it happen. So this kind of communication, down to earth type of communication with bird's eye view, with insider and outsider view. All these conjunction make it possible for those leaders to start this kind of a drastic change.
We have a question from Yukino. She asked, Japanese practices like
Nemawashi.
which is informal consensus building, are sometimes viewed as outdated within Japan by the younger generation. Yet these practices are actually valued internationally as effective leadership tools for smoother project management. Do you think that there are other aspects of Japanese leadership that might be similarly underappreciated domestically but respected abroad?
That's very interesting. So what I think is this multi-stakeholder management. Okay. By the way, before that, I think nemawashi is it's quite traditional Japanese way of consensus making. So, but the thing is, when the leaders sometimes they use nemawashi, but the nemawashi is not to make the real consensus to the end. So maybe it's not nemawashi. So those leaders go down to the real gemba people, right? Those factories, so on, to gather the information, but not to make full consensus. If he or she want to make full consensus, it takes too long time, or sometimes the decision will be not cutting edge. Okay, it will somewhere in the middle. So they get to nemawashi, some kind of quasi nemawashi, okay? Not to make consensus. That's what I think is the difference between traditional nemawashi and then Resolute Leaders nemawashi. Okay. By the way, and then come back to the answer of this question is I think the multi-stakeholdership. My understanding is, let's say, a US Roundtable 2019, if my memory is correct, they said, okay, let's shift from shareholder-oriented governance towards this more multi-stakeholder-oriented governance. Okay, so this means they wanted to move more to Japanese style of multi-stakeholder. But at the time, as I mentioned earlier, the Japanese multi-stakeholder governance was multi-stakeholder include employer, customers, employee, customers, or business partners, sometimes even society, but the less emphasis on shareholders. But nowadays, modern multi-stakeholder management of Japan include shareholders. And then I think that is something respected abroad. So sometimes Japanese people regard, I'm not sure if it's good or bad, but they're working hard on it. But I think these days, this is one part. The Mike Sim and Habyo Shin, who is a top professor, award and appreciated. Hey, JJ, this is very special. And then special operation and management tools that should be introduced abroad. Okay. So how they manage this multi-stakeholder management, including shareholder, is sometimes we regard that could be a trade-off relationship. Okay, they may contradict each other. How these resolute type of leader manage is more cyclical. Okay. So when they said it's in order to make good performance of the company, first they have to make employee happy. If the employee happy, okay, so they appreciate the employee do the good job, and then they make customers happy. If the customers happy, and then the performance will get better. If the monetary performance get better, the share price goes up, and then that make shareholders happier. Okay, if they get good money, they can treat their business partner better, right? And then, so this kind of happy cycle is something those Resolute leaders are exercising these days.
You mentioned that it's a very happy cycle, but once we have shareholders getting into the picture, into the boardroom, sometimes it's not quite so happy. Mm-hmm. We have a question from Takumi on LinkedIn who says that METI, the Ministry of Trade and Industry, has now started allowing unsolicited takeovers, and mm-hmm. Japan is finally beginning to follow the logic of capitalism, with shareholder capitalism gaining ground. Mm-hmm. The Tokyo Stock Exchange is also issuing warnings to companies with a price-book ratio below 1. So Takumi thinks we'll see an increase in activity from shareholder funds. What do you think?
Yeah, that's right. So as I mentioned, there are some companies and leaders who could communicate market and then this kind of institutional shareholders properly. But in reality, my understanding is there are quite a numbers of top leaders of some companies who are not so good in communicating with outside shareholders. So that's happening. So this is one issue. One good or bad example is the maybe you know the 7-Eleven, one of the top retail company in Japan. Right? So they are super company, super good in operating convenience stores. Excellent. However, they are not so, my understanding is they're not so good to communicate with outside investors. So they recently got a takeover bid type of offer from, I cannot pronounce name properly, something like Ameritation Couche-Tard, the Canadian convenience store.
Yeah.
And then my understanding is their response, including the external shareholders' response, was not so good because they said the there was when they received the offer from Kushitao, if my memory is correct, the external board of directors team made a committee to react, and then those directors said, "All right, the price offered by Kushitao was too low, right? But the offer was much higher than the current market price, market cap of 7-Eleven. This means in my understanding, the external board of directors admitted the current top leaders of 7-Eleven did not optimize the value to be reflected to the market cap, isn't it? So it's a kind of a boomerang, negative boomerang effect. So this may happen. So this is one example of how the Japanese companies are reacting to the market. And then the question or some comments here is really represent the current situation of the majority of a Japanese company. But I think this trend is getting better these days, improving based on the very strong initiative of a Tokyo stock market. But this issue is still remaining. Yeah, I do agree.
Oh. I read that 7-Eleven, as you mentioned, is so good at running these convenience stores, and they provide all kinds of services like banking, postal services, and they become such a part of the Japanese fabric because even when, of course, Japan is very prone to earthquakes, and they have that whole system of ensuring that all the emergency, if there's an earthquake, they can send out supplies, emergencies, even faster than the government can sometimes. But do you think sometimes this resistance, because it's so much part of the Japanese national pride and identity, the convenience store, makes it harder for an external shareholder to, let's say, take over?
Yeah. So that's yes, to some extent, to some leaders. But if you look at some company called JSR, JSR is not famous outside Japan. It's a B2B material company. Okay, so the top leader of JSR was Mr. Koshiba, who has pretty extensive experience abroad. Maybe he has he worked for US, if my memory is correct, for more than 10 years. So he has very good Japanese mindset and also very rational global standard mindset. And then, so JSR recently go private by leveraging the private equity support in order to reformulate the industry. So they thought, while keeping them listed, it may be not easy for them to prepare for the future because the industry may change drastically. So they intentionally go private. At the time, they use private equities money. So there are some company like that, and then I think this type of company is increasing. I don't mean the go private company is increasing, but I think the leaders who could communicate and leverage the input or money from the external shareholders is gradually increasing. But in reality, those company leaders who are not so good in managing external shareholders or private equity money are still many. So
Okay.
So that's a reality.
Yeah. I'm old enough to remember how, was it in the 80s, even 90s, the whole world wanted to learn Japanese management practices. So like a Kaizen model and all that. In America especially, there was this sense of dread that America's corporate America was going to be taken over by Japan. I think Japanese companies were buying lots of American companies, real estate. How much did American companies actually learn and put in practice Japanese business practices?
My personal opinion, I think quite a lot, based on my experience of working for BCG and GE and Mars, those three American consulting company, and then consumer goods company, and GE is B2B companies. I think they've introduced quite a lot of Japanese practice, or they introduce it. So one good example is like a GE. GE introduced a Six Sigma. Maybe you remember, right?
Yeah.
So Six Sigma is a standard operation in GE, and then it came from Motorola. It's a quality management system. And Motorola's quality management system came from the QC circle of Japan. So this is a Kaizen. So sometimes not so many people realize this introducing Six Sigma in outside GE. They do not realize the Six Sigma is originally came from Japanese essence, Japanese Kaizen essence. But in reality, this Six Sigma and those Kaizen, including QC, is coming from a Japanese Kaizen mindset. So that's, I think, quite a lot of American companies introduce this. And then that's reason why the operation quality of US has improved quite a lot. Of course, not perfect, but they're comparing to 30, 40 years ago. I think the average operation quality of American service and manufacturing has improved quite a lot. And then one reason is they learned from Japan, the Kaizen and others.
And if I remember, actually, the Japanese emphasis on quality actually came from Deming, who came from outside Japan. So it's a kind of a nice circle.
Exactly. That's also a very important part. So my understanding is Japanese beauty is learning from abroad and then integrated into Japanese spirit. We call it Wakon Yosai and Wakon Kansai. Wakon Yosai is learning from West, and then Wakon Kansai is learning from East. So Japan is openly learn from Western knowledge and Eastern knowledge, and then conjunct it into the Japanese context and spirit properly to upgrade the learning.
So Christopher remembers this movie called Gung Ho. It's comedy where they show the differences in management styles between American and Japanese management, starring Michael Keaton, and that both sides had merit, worked even better when they combined honesty with system reliance.
You're right.
Yeah.
That's what I wanted to say. Thank you, Christopher.
Yeah. So, JJ, in your book, you wrote about how Japanese companies they still have this long-term approach, but now they're trying to balance it with an emphasis on the short term as well. And definitely things when you look at share prices, that's very much a short-term sort of cycle. So you wrote about companies like Hitachi, for example, who tries to do this, balance these two views. How do they do that?
Right. Yeah. So Hitachi or Itochu, they wanted to keep a good balance of short term and long term. Okay. So both sides, I think how they manage is to the top leaders' mindset to kill their self-interest and then more commit to the long-term growth of the company, or commitment to the vision, a realization of the vision and strategy of the company. So I start from maybe Itochu. So Itochu is the CEO, my dear, I forgot his name. The CEO said, when I did the interview, he said he could optimize the profit of one period. Okay, but he dared not to optimize the profit, but he invested this money instead of maximize the profit and then invest for the future. So one time, in certain period, the profit was not bad, was not gorgeous, but the current prosperity of Itochu came from his investment for the future. Yeah, but instead of maximizing the profit. So this kind of short-term, long-term profit, of course, if it goes red ink, that is a trouble. But he said he tried to keep the balance of short term and long term. So that's A. B is Hitachi. So not so many people realize, but the Hitachi's share price has dramatically increased past few years. So Hitachi reformation started 2009, yes, when they made a huge, one of the largest red ink in the Japanese history. They made roughly, let's say, 8000億円だから nearly 800 billion yens minus. And then the resurgence start from that. And then they made a lot of drastic portfolio change. They sold about 20 companies and they acquired 20 companies, including some of their core business. And the first 10 years, they did it steadily. Okay, it was a very tough period for them. And the thing is, during those periods, their share price was not so high. Yeah, so they need some patience. So three leaders, Kawamura-san and Nakanishi-san and Higashihara-san, those three leaders have to have a good patience, even though they're working hard for reforming their portfolio, having the long-term view of the long-term goal, but the market did not appreciate it a lot. Okay, so they have to wait for maybe more than 10 years while the market really appreciate their reformation. But in past few years, their share price rose dramatically, maybe 4 or 5 times than their starting reformation period. So that, I guess, is one good example of long-term view and then keeping the balance with short-term view, short-term performance.
JJ, you talked about how Japan or Japanese companies are very good at learning from abroad. Satoshi asks, though, do you see any examples of Japanese companies struggling with the engagement of foreign employees?
Honestly speaking, quite a lot. Okay, I think there is some bipolarization of Japanese companies. Okay, so some companies are getting very good, some Resolute Japan company, and some not bipolarization, maybe 3 tiers. Okay, one pretty good Resolute Japan type companies, and then there's a middle group who is towarding this area, and there's also the other companies who are not reluctant, but maybe who do not realize the needs of change or still stick to the old tradition. So this is I'm probably participating more than maybe 30 companies and executive program. Okay, from top to not so good. And then some companies, honestly speaking, are very slow to change and then struggling to adapting those foreign employees. And at the time, such a company have a problem of communication between Japanese and then the foreign employees. So, and then many foreign employees are quitting in a short period of time. So, yeah, it's right. I see many examples of these failure cases. But at the same time, I found there are many good cases. And then in general, maybe majority of the companies are struggling to moving toward the better direction. That's my observation. But you're right. There are some certain numbers of companies who are still slow and then stick to the tradition.
What are these companies that are doing well to engage with foreign employees? What are they doing?
What they're doing is they are many things. One thing is that one commonality for those companies are those companies do the cross-culture management training for both Japanese side and then non-Japanese side. So Japanese side, they teach, of course, I think in Cambridge, maybe you learn Hofstede and Hamilton Tanner and so on and so on. So this kind of cross-cultural management training is A. One interesting is toward the non-Japanese, they teach the Japanese management mechanism. Why Japanese company applied lifetime employment or senior-based wages or so on. The mechanism, of course, it's changing, but they start explaining why traditional Japanese company apply this. There is a background, why this was good, pros and cons, and then educate those foreign employees. Of course, it's changing. So in that way, foreign employees understand, why you are doing this. So that may enhance the communication better. So that's one common tips I thought for the very somehow successful companies who are doing this kind of for accepting foreign employees. One more thing is, especially for senior executive level, middle level, some multi-layer joint training program for Japanese employee and foreign employees. So in most cases, those successful companies have a kind of joint program for like a mixture of Japanese executive and then non-Japanese executive, and then have some kind of sometimes 6 months or 1 year joint training in English. So that's also one, I'd say, common operation I observed so far.
JJ, what are some of the similarities or differences between corporate business leaders in China, India, Japan, America?
That's interesting. Could you show the... Yes. Yeah, thank you. Yeah. So in the interview, we've asked same questions to the Japanese and Chinese, Indian, and American companies. Okay. This is one interesting example. So we asked them, what is the most time-consuming areas for your leadership to American, Indian, Chinese, and Japanese executive? And then this is a top 5, 6 rank. And then what I found is maybe in Japan, we think, US is more standard, global standard. But if we compare this American, Indian, Chinese, Japanese, it looks like, American leaders are kind of peculiar. And we have more commonality across Indian, Chinese, and Japanese company, if you look at this one. So in the question of the most time-consuming areas, American leaders said, number 1 is regulatory issues. Second, to reporting to the board. Third is shareholder relations. That's one. But Indian, Chinese, Japanese companies said, number 1 time-consuming is setting strategy. So those 3 countries' leaders have same top priority. Second, then they have a difference. So Indian companies, number 2 is regulatory issues, some similar to American, and referring to the board. And Chinese, setting strategy, build top management team, and nurture corporate culture. And Japanese company, setting strategy, employee relations, corporate culture, and customer relations. So that's some difference, but the setting strategy as top priority is commonality for Indian, Chinese, Japanese companies. On top of it, what I found is Indian company and Japanese companies, both are regard employees as their asset, right? Not a cost. So both Indian and Japanese company put energy on Japanese company via traditional OJT, Indian companies by off JT, but they regard the employees are asset to be trained. And Chinese company and Japanese companies, some commonality outside this is they both want to learn from their experience. Okay, but however, the Chinese companies emphasis more on the growth. So Japanese companies are a little more risk-averse. So their behavior towards the risk are a bit different between Chinese companies and Japanese companies. But there is some commonality and difference.
And what about sort of the leadership models in those countries, between those countries?
Yeah. Good, thank you. So this is a comparison of US leadership and then traditional leadership and Resolute Japan leadership in terms of leadership strategy, CEO selection, stakeholders, top authority, and so on and so on. So I think I've already talked about leadership and then strategy side. Maybe I should emphasize on strategy. So U.S. leadership has a tendency to make strategy from more outside in, external market oriented. And then traditional Japanese companies, Japanese leadership have a tendency of making strategy from internal resource oriented. Okay, so that's I think one reason why the Japanese U.S. company apply more Michael Porter type of 5-4 external analysis starting from outside in, and Japanese companies apply maybe unintentionally but resource-based view. Okay, start from what is our strengths. So resolute Japanese leaders apply both internally and externally orientation of the strategy. So they merge both the good point of US and then Japanese tradition. So that's one. And then also, like how about so board structure is changing gradually, triggered by the corporate governance code introduced by Tokyo Stock Market in 2014. So Japanese board structure was very, I say, unique. They don't accept many external board of directors and so on and so on. But after the introduction of a governance code in 2014, the Japanese company introduced more external board of directors and then coming more closer to US model. However, I think this is good. Yeah. So we have very good balance of internal and outside point of view. It's very difficult to say. Some Resolute company has pretty good external board of directors. They know how to utilize, how to leverage good external board of directors. But the problem is, all of a sudden, we have so many external board of directors. I think currently the requirement numbers of external board of directors increased by maybe 3 to 3.5 times in past 10 years. But the problem is we do not have such a numbers of capable external board of directors. So that's one challenge. Okay, we introduce good exercise that we need enough number of capable external board directors. So that's the next challenge. And the Resolute leader has pretty good knowledge of how to gather those capable external board and then leverage it. But others, not yet. Okay. So that's the one of the biggest challenge, I guess.
All right. Well, thank you so much, JJ, for showing us that Japan has very interesting business models that could be applied to non-Japanese companies. And hopefully some of the Japanese students, whether at Waseda or at Cambridge, will take up your challenge and lead these companies and maybe become those capable board of directors. Your book, it's called Resolute Japan, and if people are interested, it's available on Amazon. And thank you so much for tuning in. The balance sheet will be back on the 22nd of November, 12:45 UK time. Fellow alum Harsh Mota will talk about the different ways the finance department works in companies. So till then, stay well, and we'll see